Howdy, folks. Welcome to Liberty Call. Today is Wednesday, February 28th, 2024. Hope you're having a fantastical day out there. Yeah, it's a beautiful day here in Colorado. Mail truck just drove by, and sun's out. All that snow we got yesterday. I mean, it wasn't a whole lot, but even more irritating is after I did my broadcast yesterday, went outside, cleared the driveway. I mean, it was only about, 2-3 inches. Real light powder, not too, but it started to get like slushy in spots. So it was like clogging up my snowblower. If you've never used a snowblower, you probably never had that aggravation before. But it's kind of like if you like mowing your yard. For the people down in Texas, that St. Augustine grass, on like a wet day, the chute gets all clogged up and you got to, don't stick your hand in there when it's running. But, so I used to have to like beat it up and down to get it to clear the chute. So same thing here with the snowblower. You just kind of smack it up and down a couple of times and it'll clear. It also has a little poker thing that comes with it to stick down in there so you don't, lose a paw. So anyways, you didn't come here to listen to me complain about clearing my driveway. Oh, and even worse, it snowed again last night after the fact. So, I mean, maybe an inch, just enough to cover all the clear spots so that they're extra slippery today. So, and most of it has melted off. So anyways, again, you didn't come here to hear about this. You came to hear about what's going on in the financial markets and what interesting stories I want to cover today. Right? Exactly. All right. Well, if it is your first time watching Liberty Call, if you could do me a favor, yes, you in the purple shirt right there. I see you. You're probably an LSU fan. Give me some thumbs up, like, share, subscribes, follows, and press that notification bell. All right. Whew. Now that we're through the intro, let's get into the markets for today. The Dow Jones finished the day down 0.06%, 23 points, closed at 38,949. The S&P 500 was down 0.15%, closed at 5070. NASDAQ down 0.55%, closed at 15,947. The VIX was up today 2.76%. It's at 1380. Canada down 0.35%, Brazil down 1.2%, and Mexico down 1.57%. In Europe, Germany was up 0.25%, the UK down 0.76%, France up 0.08%, the Netherlands down 0.65%, Spain down 0.45%, Italy down 0.27%, Switzerland down 0.23%, and Portugal down 0.44%. Russian exchanges both green today, the MOEX up 0.58%, the RTSI up 1.56%. And the Asian markets, the Nikkei was down 0.25%, Australia down 0.03%, New Zealand up 1.39%. In China, the Shanghai was down 1.91%, the Shenzhen Component down 2.4%, China A50 down 0.74%, DJ Shanghai down 1.93%, Hang Seng down 1.51%, and the Taiwan weighted was closed. All right, so mostly a red day across the globe. So again, is the money train and all the stimulus and all the spending that's happened over the last few years, is this the time? I thought it was last August when we started that downtrend for a few months. And then, in November, December, we started a new uptrend for a few months. So it's kind of just been back and forth. And, the volatility isn't great. I'm not a big fan. And then look at, like Bitcoin, that is just gone crazy in the last couple of days. So be careful out there, folks, because the markets are volatile. Not just stocks. The market in general is really, really volatile at this point. So be careful where you put your money, folks. All right. First up, the market recap: U.S. stocks slip as focus shifts to key inflation data. All right, on Wednesday, U.S. stocks managed to trim some of their losses, supported by a broader market rally extending beyond major tech stocks. Investors remain focused on ongoing quarterly earnings reports, eagerly anticipating the Federal Reserve's release of key inflation measures scheduled for Thursday. Amid signs of a cooling economy, the U.S. GDP expanded at a 3.2% annualized rate in the fourth quarter, slightly lower than previously reported 3.3%. This downshift from the prior quarter's 4.9% growth indicates a slowdown in momentum towards the end of the year, according to analysts at Stifel. Market attention turned towards the upcoming Personal Consumption Expenditures Price Index, the Fed's favored inflation gauge. Federal Reserve officials emphasized the importance of patience regarding potential rate cuts, with some, like the Atlanta Fed president, who is Raphael Bostic, emphasizing that the task of curbing inflation is not yet complete. In the corporate sphere, Beyond Meat saw its shares surge over 55% after reporting robust quarterly revenue and offering an optimistic outlook on margins for the second half of the year. Really? People eat that stuff? I'm a meat and potatoes guy. I like real food, not stuff that's made up out of a lab. But hey, do what you want, folks. All right. Similarly, TJX companies witnessed a 0.7% increase in its stock price following higher than expected sales growth in the fourth quarter, although its future guidance was perceived as conservative. Conversely, Urban Outfitters faced a 15% decline in its stock value due to disappointing earnings. eBay experienced a 7% rise in its stock on the back of strong earnings and promising guidance, while Bumble stumbled with a 13% drop in its stock due to weak revenue guidance. Cryptocurrency-related stocks, including Marathon Digital Holdings, Riot Platforms, and Coinbase, soared as Bitcoin surpassed 60,000. I think it was up to 64 today. It was in a range of like $7,000 from peak to trough. I think it opened at like 57, got up to 64. And last I looked at it earlier this afternoon, it was around 60. This surge anticipates the upcoming halving event expected as early as April, which historically preceded bull runs for the Bitcoin. All right. Well, that's everything in the market recap for today. Next up, we're going to cover an article here from First Trust. It's the fourth quarter GDP preliminary. We're going to just read through this verbatim. It's pretty short. And this comes from Strider Elas. He's a senior economist, and Brian Westbury is their chief economist. All right. So I'm going to just, like I said, read this verbatim. Real GDP was revised slightly lower for the fourth quarter. Let me make this bigger. To a 3.2% annual rate from a prior estimate of 3.3%. The downward revision to the overall number was due to lower net exports along with a small change in inventories. These declines offer upward revisions to personal consumption of services, government purchases, home building, and commercial construction. To analyze the growth trends more accurately, we follow core GDP, which includes consumer spending, business fixed investment, and home building, while excluding government purchases, inventories, and international trade, which are too volatile for long-term growth. Core GDP increased at a respectable 2.9% annual rate in Q4. Regarding monetary policy, today's inflation news shows price growth continues to slow, but the battle is not over. GDP inflation was revised slightly higher to a 1.6% annual rate in Q4 versus a prior estimate of 1.5%. But GDP prices are still up 2.6% from a year ago, above the Fed's 2% target. Meanwhile, nominal GDP, real GDP growth plus inflation, rose at a 4.9% annual rate in Q4 and is up 5.8% from a year ago. In other news from yesterday, the M2 measure of the money supply declined 0.2% in January and is down 2% from a year ago and 4.2% lower than the peak of July of 22. Monetary policy operates with a lag, and we are likely to feel the negative economic effects of these declines in the year ahead. All right. Yeah, I mean, it's nice that the M2 measure has come down 4.2% from its summer of 22 peak. However, it went up 40%. So it needs to go down, like, I think I ran the numbers real quick earlier. It was like 27 to 30%, somewhere in that range. So it has to fall 30% to get back to where we were. And again, it's never going to happen unless, something catastrophic occurs. But yeah, up 40, down 4. Yeah. Okay. All right. Next up, article from Zero Hedge. It's titled "U.S. GDP grew $334 billion in Q4, and that growth cost us $834 billion in debt." So that is awesome news. So to go up, we had to go further in the hole. All right. The recent release of the first version of Q4 2023 GDP by Biden's Bureau of Economic Analysis coincided with Bitcoin surging above 60,000, signaling a link between the two events. The revised GDP figure showed a modest increase of 3.2%, slightly lower than the initial estimate, with consumer spending, exports, and government expenditure driving growth. Notable changes from the first estimate include higher than expected rise in personal consumption, contributing significantly to the overall GDP. However, the significance of these GDP revisions is overshadowed by the mounting debt driving economic growth. A closer look at the nominal GDP increase revealed that the U.S. economy grew by $334.5 billion in absolute dollar terms. Hang on a second. All right. In absolute dollar terms, where was I? From Q3 to Q4. This growth was fueled by a substantial increase in debt, highlighted by the data from the U.S. Treasury debt to the Pennywise website, which showed a staggering $834.2 billion rise in debt during Q3, resulting in a $2.5 debt to GDP ratio. The reliance on debt to fuel economic expansion underscores the precarious state of the U.S. economy and contributes to the surge in Bitcoin prices. As the U.S. accumulates debt at an unsustainable rate, investors turn to alternative investments like Bitcoin as a hedge against inflation and currency devaluation. The growing realization that traditional fiat currencies are increasingly unstable and susceptible to manipulation drives demand for decentralized cryptocurrencies like Bitcoin. The correlation between rising debt levels and Bitcoin's price surge suggests a loss of faith in traditional financial systems and a growing preference for decentralized digital assets. This trend is likely to continue as the U.S. economy approaches a point of no return, further fueling Bitcoin's ascent beyond its previous all-time high and towards even greater heights. Yeah, so it's not a good thing to go further into debt to have the economy grow. Not a good thing, folks. All right, one last article here, also from Zero Hedge. This one's titled, Will a Money-Hungry Government Take Away Your IRA or 401k? And this comes from Mike Shedlock via mishtalk.com. All right. The author, Mike Shedlock, argues that 401k retirement plans in the U.S. are on the brink of extinction within a decade due to a growing movement questioning their value. Shedlock cites a Bloomberg op-ed suggesting that the federal government seeks new revenue sources. The tax treatment of 401ks could be targeted, further accelerating their demise. Despite the purported benefits of retirement savings for the economy and individuals, questions about the effectiveness of tax breaks in encouraging savings have emerged. Research, including a 2014 study of Danish savers, indicates that tax-advantaged retirement accounts may not significantly increase overall savings, with the wealthy being the primary beneficiaries. Shedlock argues that neither conservatives nor liberals strongly support tax-advantaged retirement accounts, and savers seem indifferent to them. He questions the purpose of 401k plans in light of these findings. The article highlights the importance of personal savings, especially as traditional pension plans become less common. Shedlock criticizes proposals from some political figures, including President Biden, Senators Warren and Bernie Sanders, to eliminate 401k plans, arguing that such actions would exacerbate the retirement savings crisis. Shedlock emphasizes the need for individuals to take responsibility for their financial futures, advocating for initiatives that encourage more savings rather than less. He suggests exploring alternative savings vehicles like Roth IRAs and warns against excessive reliance on credit and buy now, pay later plans, which contribute to consumer credit stress. The article concludes with a call to action for individuals to prioritize savings, especially in light of rising credit card and auto delinquencies. Shedlock urges those facing financial challenges to find ways to escape debt traps and build meaningful retirement savings, emphasizing the inadequacy of current savings levels for many Americans nearing retirement age. Yeah, that wouldn't be, well, I mean, I understand why the government would want to get rid of the 401ks because there's a crap ton of money stashed away in those tax-deferred accounts. And if they could get access to them and pull them across that tax threshold, then they get all that tax money. And it's taxed at ordinary income rates. So the government's greedy. They want your money. And, that's where good financial planning comes into play so that you can stash your cash in all the legal vehicles available to you and make sure that you keep as much of it as possible. So if you need help with that, I know a guy. Me. Anyways. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.